And good morning, everyone, and welcome to the pre-market rundown for Friday, April 9th, 2021. I'm Andrew Horowitz, and I am the host of this and the founder of TriggerCharts. So there I am. Hey, everybody. How are you? Can everybody hear me okay? Make sure you let me know in the chat. Of course, the chat is available for you also to provide me with any kind of thoughts you have, questions, feedback, as well as if you want to talk about some of your stocks, future symbols, and all that. So give me a quick check back in the chat to make sure that we are sounding okay, looking good, and everything is okay. I put in the chat also some things that you probably want to be aware of, that you can get a 10-day free trial for any of the TriggerCharts indicators, as well as the fact that you can try those for free. And there's a 10-day free trial for that. There's also a 4-hour free course for anybody who is a subscriber. New subscribers get a 4-hour course. So if you subscribe, send us a note to support@triggercharts.com, and we'll do our best to make sure you get the keys to that overall. All right, before we begin, we have to talk about the disclaimer, disclosure, and all that good stuff for legal purposes. We're going to make sure that you understand that investing involves a good degree of risk. You can lose all of your money. It is not anything we talk about is not recommendations to buy or a solicitation to sell any security at all. Everything that we talk about today is for the purpose of education. And primarily, we're going to educate you on technical analysis and charting. I got to get myself more organized here. What we're going to talk about is something that we really believe is extremely valuable in the area of trading, because a lot of people look at trading and they just look at indicators, they look at price, they look at things like, a simple moving average. What we've done and why we've done it is we've looked at something called market profile, which is a combination of volume as well as a combination of price at the same time. Now, of course, you could take a chart and you could look at volume all day long. It's that horizontal along the bottom and see where you are. But what is that volume really mean, and what does it really represent? Well, if we look back on a chart, a normal chart, an everyday chart without any special indicators, and just look at the volume, we can say, well, that day there was a lot more volume, and look at the price action. But it doesn't really tell us where investors, whether they were individual investors, retail investors, whether they were hedge funds or pension plans, sovereign wealth, it doesn't tell us anything about where people were buying the stock. In other words, the range that day may have been from $50 to $60. Well, were they buying at 52, 58? At 60, where was the bulk of the volume really taking place? So what we've done is we've combined all of this. We've actually go tick by tick, looking at the volume on the price where it was executed. And then what we do is we start to add that up in a library. We start to put that into play to see where those investors were really buying and selling. Because what we can find from that is where those levels of support and resistance are. Now, that's one part of it. Beyond that, we also put in some algorithms that will look at swing patterns on the stocks to find out exactly what those levels are going to be, most likely, and where you can place the idea of my breakdown levels, my support, my resistance, etc. And very easily, we color code it. Look to the right side of this chart, and you can see that we color code it, and it is very simple to look at. Let me bring up my annotation tools, which I can't seem to find. Oh, there we go. So much stuff on the screen. So where are we right now? Let's take a look at the morning before we get started. The PPP was just released late. There was a big, I think the BLS site is still down actually. But the PPP, the Producer Price Index, one part of the equation calculation, which is the manufacturing, the pre-consumer, the before it gets to the consumer prices, increased a whopping 1%. in the last reading last month, and 0.7% on the core. That is pretty much, core was supposed to be at 0.2, 0.7, by all accounts, is hot. Yes, we have inflation. I was concerned more so about the year-over-year calculation of inflation, but what we're seeing right now is that there's more than just the year-over-year. What we're seeing is that there's also significant monthly pricing pressure. That's going to put a crimp on the NASDAQ, which is down 90 points today before the open, and the ES or the S&P 500 down 6. Now, interestingly enough, gold is down 24, not taking this very well. It's kind of a interesting battle that goes on with some of these precious metals right now with regard to how they are going to handle inflation. Because traditionally, we say that, well, gold and other commodities are inflation hedges. Yes. However, the question is that what kind of inflation are we talking about? Right now, what's happening is that we're seeing the dollar start to come up a little bit with the thought that it's going to be an increase in rates. And kind of gold is trying to feel its way out, and silver as well with this. Not really acting great lately with the idea that there is going to be inflation in the future. Had a pretty good run when rates were coming down and when the dollar was coming down, but now it's kind of been in this range. But we'll talk about that a little bit more and some of the things that you mentioned here. By the way, thank you all for joining in. I really appreciate it. I'm going to put a couple things on the board now to talk about what is going on. Well, inflation fears. There's no question about that. I mean, obviously, we have inflation fears that are a big issue right now that is really creeping into the market. And again, a lot of this is being told to us, force-fed to us, that it's all transitory, right? That it's all about the idea that, you know, we're going to see a little bit because of the deflationary spiral that we were in last year. 1 year ago today, in March, April, May, where the government forced a lockdown, not only here in the United States, but around the world. And that caused a significant deflationary spiral. And as such, when we have those deflationary kind of modes that were set in the markets a year ago, when we kind of fast forward all the way 12 months and we look at a year over year, which is a smooth average of inflation, we know we're going to see some inflation numbers, 4, 5, 6% temporarily. And then it's going to start to get a little bit better. However, this kind of number that we saw today, 1% on the top, on the headline, 0.7% on the core, that's really serious numbers. I don't think anybody is surprised that we are seeing, due to supply chain issues, due to the global demand issues, due to the amount of stimulus, low rates, all that's gone on, the lockdowns being expired, the places around the world reopening. Is anybody surprised of the fact that we're seeing some inflation creep into markets? I don't think so. Again, the question is going to be, how long does this go? But one of the things that we did see was the bond market was really peaking up. We started out the 10-year yield at 1% at the beginning of this year, 1.75% of the peak a couple of weeks ago, and then it started to subside. So the NASDAQ got some legs. NASDAQ's going to be the most affected. The tech names, the healthcare names, the Momo names, the high multiple names are going to be the most affected by higher interest rates. And with higher interest rates, it seemed to be, oh, well, that's over. Fact, there was a massive rebalance that happened. We talked about this a little bit a couple of weeks ago. Massive rebalance that happened because we saw that many of the bonds were deflated and stocks came up into the quarter. So what happens is that on a pretty much automatic situation, it's by mandate, those balanced funds, sovereign wealth funds, pension funds had to kind of rebalance their portfolio again. They had to take the drop in bonds and take some of that gains in stocks and move it over. So they kind of swapped it on over. And that happened the first couple of weeks. That in itself was reason that bonds were bought. And therefore, and this is really important, rates started to come down again. That really pushed over the last 5 days. Just look over the last 5 days what happened with the NASDAQ compared to maybe the Dow and bonds. So there is a direct correlation that's happening right now. And it's kind of a little bit nerve-wracking because the question is, for a lot of people, is this for real? Are we going to see bonds at 2%? And if so, is that really going to take down the names like Netflix and Apple and Tesla? Google, name the names that you know that are the big caps of the big caps, the mega caps, and will that take down markets itself? That's why a lot of people, and you're hearing, this is a stock picker's market right now. Because as an indexer, if people are out there, this is really important to know as a trader that as an indexer, you may get hurt by being involved in the index itself, but you may do just fine owning names that are outside. For example, value stocks versus growth stocks have pummeled one versus the other. I mean, value stocks, the banks, the financials, the energy stocks have been on fire. The trend right there, you're seeing breakouts above resistance levels across the board. And really that's what the whole discussion has been this year thus far. Infrastructure, we have that as a big theme right now. We have corporate tax hikes. That's also an issue that's kind of floating around the back. Already Biden blinked, talking about a 28% tax rate versus 21, removing the Trump tax breaks from corporations. And now already we saw a couple of different senators and some Democrats that would say, hey, you know what? I don't think we're going to support this. And as such, since they said that, well, they're not going to be able to get this thing passed. So Biden said, well, maybe I'll negotiate some of this. Maybe I would do a 25% tax rate. Now, very different from the last president that said, you know what, this is what we're doing. You don't like it, the hell with you. Not that that's a good or bad commentary right there. Just fact, just different way of negotiating. And the truth of the matter is that Biden blinking does not give him a lot of strength in this particular circumstance. Markets really took to that the other day and said, hey, you know what? Maybe we won't have that tax situation that's really a problem. And again, that did help some of the names that were paying the least taxes, getting the best tax benefits, like many of our names like Amazon, like Apple. Massive money is coming in for EV. We know there's probably about $150 billion or so that's going to be, supposedly, if this next stimulus plan passes, allotted for EV charging stations around the country to build this massive infrastructure for charging stations. A few stocks that are interesting for that. And for shovel ready, we're going to have, the shovel ready, which this kind of idea that's eluded us for years. They have these shovel ready kinds of programs available, and redoing the bridges and the roads and the tunnels and the trains and all the things that go along with that. That has been another reason why you've seen this year such a play into the industrials, Caterpillar as an example, the companies like steel. I'll tell you a quick story. You want to talk about inflation here? So I shave with a single edge razor, where you got the razor and you put it into your thing, you screw it in. Those, I buy these feathers that they call feathers. That's the brand. Those I looked just recently. I bought the last one in 2019 because they last a long time, a box of a few hundred. I bought those in 2019 or so. It was $11 for the order that I ordered. Just yesterday I ordered them, $22. I couldn't find them cheaper anywhere. I'm sure there's somewhere that's cheaper, but I couldn't find them really cheaper anywhere. So kind of interesting situation there. Question is, will this all get passed? That's really the big issue right now, whether or not you're going to see this opportunity for getting this passed. And I just would say that it's going to be a good fight. Inflation versus the Fed is another theme right here. The KRI is overheating again. Let me kind of bring that up here and look at that. So we're starting to see, interesting. We closed yesterday a little bit, just refreshing this. We had a couple of fours up here. I guess they were the fours right here. Last couple of days came down a little bit. We're at +2 right now, +3. I would say that we had some clusters. Those cleaned out a little bit. I would wait to see this kind of move again where we start to get deep red, which we're kind of almost there right now. And then there's rotation down. After today, we're probably going to come back to maybe a +2, possibly. We're at a +3 right now. Definitely going towards the overheating side. This is also available on the TradeStation trading app, the trading app store. Does one thing only. Can't change the symbol. SPY is the only symbol you can use. It's a lot of things that just kicks off what's happening in the background. It's not really a read on SPY, although this is the SPY chart. What this really is telling you something. If you kind of think, okay, it's not really telling me about a stock. It's not really telling me about the SPY index. It's telling me about the broad-based psychological, as well as things like put-call ratio, Spearman indicators, a variety of, there's a whole host of things that go into this to look at the psychological indicators and where we are on an oversold or we are on a overbought situation or overheated situation to see if there's kind of like, we're too hot, too cold. Is there an opportunity to look at that and to appropriately look at your overall portfolio? Here's something you probably noticed this twist and churn daily. This idea that one day up, one day down, one day up, one day down. You see your EV stocks do really well one day, your solars do well the next. It flips around, they're doing horribly. It's almost like somebody's trying to kick you out. And the problem is that right now, this is a big problem for anybody that's trading on a swing trade that has weak hands. And I'm not going to start talking about paper hands and diamond hands here, But weak hands are a problem right now in this environment because you're going to get kicked out and kicked in the teeth. One of the reasons is you look at some stocks like some of the solar stocks. You know, they're up 12% one day, they're up down 9% the next. They're up 10% the next day, they're down 8% the next. And what's interesting about that is if you're buying because you're seeing that it's moving up, so you're buying on the plus 4%, and it moves up 10% to the end of the day, you're like, hey, I'm doing great, I'm up 6%. The next thing, this thing comes down 9%. What do? Do you hold? It came back underneath your level that you may have drawn the line on. You're going to get clipped for 2 or 3%. Problem is that happens day in and day out. It's going to end up making you lose money. What you want to do under those circumstances, first of all, extend your trading range, extend your time frames. Don't look at just the 5-minute. I don't know if a lot of you are using 5-minute time frames or 10-minute time frames or 1-minute time frames. Try to extend it to 30 minutes and see what's going on. I like to use personally daily. I'm more of a swing trader. Anything that you use, though, is appropriate. I find the more data we have that goes into our algorithm, the better the signals are. In other words, if you go on a 1-second chart, what is the point of that, right? You're just going to, and first of all, you can't click and do your trades that quick anyway. On a 1-minute chart, you're getting a certain amount of data in there. Okay, that's great, but is it enough data to really give you a very confident level of understanding what's happening? So just keep that in mind. NFTs and SPACs have also been there. I'm going to give you an idea on an NFT stock today that we've been looking at. The crypto space, of course, is moving. Bitcoin up 840 in the 58,000 range. Anywhere from 55 to 60 is kind of the wide range right now. I talked about the base effect and the PPI, ISM manufacturing service, massive growth. I mean, the best ISM services ever on record was recorded this week. Stimulus checks, PPP programs. I don't know if you've noticed this, but a lot more people very recently are talking about the PPP program again. They have to the end of May, I believe it is, I think it's the end of May, to put their applications in for not only the first, but the second draw on the PPP, and a lot of money's coming into the system that way. Unemployment, 900,000 new additions, 6% unemployment rate. Obviously, the Fed has said time and time again, almost obnoxiously, that they are not going to move until we get to a full employment situation. Problem is, it's going to take so much time, and the top employment levels versus the bottom, where maybe some of those jobs have been destroyed permanently, unfortunately, due to technology advances and the way we're doing things, the stay at home, just think about the people that are not going into the offices. Just this one situation, and then you can expand this out on your own. You have a situation where people are not going back to the office. The coffee shop that was in the office, the janitors that were in the office, the toilet paper that had to be ordered, the pens, the electricity. Think about all the things that go just into an office building itself and all those jobs that could be lost permanently because people are going to opt to stay home now, not because they have to, because they like it and they're very efficient and they could do the job there. Why should I own an office that is costing me $25,000 per month, for example, to house 15 people with all the air conditioning and the phones and all that, when I can just have people go and do it from their house and maybe pay them a couple of bucks for their cell phone bill? Think about it. And if they're just as efficient and business is doing well, then it's okay. Some places won't have that situation. Obviously, a manufacturing facility can't have that. You can't have work at home and produce goods. Just not going to happen. You can have your salespeople working from home. That's possible. You could have your bookkeepers. You could have your accountants. You could have your president, and you can have all that working from home. But generally speaking, the manufacturing floor has to have people on it. So kind of a change to the environment. I want you to think about all the possibilities of what that's going to mean for the future. Earnings season starts next week. I want to talk about JP Morgan and Wells Fargo, Citi, Delta Airlines, United Healthcare. Also, we're going to expect some high volatility. One of the things that people want to know versus what we've heard the last couple of quarters is, what is management thinking? Remember, management got great cover over the last few quarters saying, hey, we're pulling our forward guidance because you know what? It's very uncertain times. Okay, that's fine. We know that. Not so much anymore. They better have some good answers for that. Next week, we also have the Fed Beige book. What's happening here? We have the Fed's Beige book. There we go. Sorry, a little crazy there. CPI, which of course is the back end of the PPI. Retail sales, housing starts, and Philly Fed expecting retail sales to be pretty good. Housing starts kind of vacillating a little bit with the increase in interest rates that we saw. Philly Fed probably doing very well. Talking about a variety of stocks today and some of your names. I'm going to get to yours first. because I know that's what you want to hear. If you have any stocks that you want to look at, do me a favor. Please put that inside of the chat, and we'll get to that right now. I also want to mention, I'm going to put this in here. Click this again. The full suite of indicators over on TradeStation can be linked right there. You have some great videos. We put these up each and every week that we do it on our YouTube channel. Also, you can find that on TriggerCharts, all the replays in case you missed them. And you'll be sent some information about that on a regular basis. Also, you get the, if you sign up for the Commander Series, is, I think I mentioned earlier, and you become a subscriber, any new subscriber will get the 4-hour free course for trading. It's kind of an evergreen course that we did. Everybody loves it. It's worth about $199. So you can get that if you want. All right, let's go over some of your names that you have here. Let's go with MLM. Martin Marietta. Let's take a look at this. Let's look at the daily. Let's really focus in on this whole daily chart here. By the way, when you're looking at what you have here on the screen right now, on the top here, you have what we call our radar screen, our autopilot, and you get a multi-time frame across the top. Look, 30, 60, 240, daily, and weekly. Only place that you can find multiple time frames on one single line. You know, if you use a radar right now, you got to put all different time frames in there. We base it off a 30-minute interval. Minimum is 30-minute in here, but you could use any multiple of 30 minutes. You want to do, I don't know, 180, you want to do 240, whatever you want to do in here, 90. So basically what it shows you is, you know, MLM. Let's kind of go to the bottom here. MLM, enter. Wait for that to, is that the right one? Did I not do this? Yeah, MLM. Okay, so we got a long alert on the daily here, right? You got a long alert on the daily, which we see corresponds to our daily chart. It's yellow. Very easy to understand the colors here. So you got the yellow moving up. We got a long alert here. We got long on the shorter time frame. Weekly kind of out. Right now, it looks like there's a big consolidation pattern. I talk about this. I find it really easy to do. Just grab your box tool, kind of draw that box. That's kind of your consolidation. I link several different altimeters, our support, the green to the red on the top, and see where we are. You know, you need to break above this 348 for this to get anywhere interesting for me. Right now, trading at 341, not that hard to do. Once you get there, past the all-time high, I really would see a false breakout. If it can't get above this, probably the 352 level, look for that as the add-on point. Other than that, you have some downside here. You know, you could probably crack down about 327. Looks like there's really good levels of support within here. And yeah, you can see that again, right where we are right now at about 338 is probably that yellow line that we look at. This is the aileron. This is an add-on to the Commander Series package. And it's showing that there's a good level of upside. You know, definitely we saw that blip right here for a few days. But generally speaking, from all the way back to February, it's been a pretty good uptrend mode and momentum for this stock. So everything about this looks pretty good. Even long-term, it looks good. Let's just take a look real quickly. I like to kind of zip around. Yeah, look at this. This is the same look. Long consolidation all the way back to pretty much the beginning of this year. In February, a few months ago, and you're seeing that there's pretty good consolidation above here. You know, I think this is a pretty good looking pattern. Flat top, you know, really good support on the bottom, 333 to 347. Expensive stock for some of you, but pretty good. Let's look at, what do we got here? STZ, that got hurt, I believe, yesterday. Constellation, yeah. Not terrible. When we look at it on a weekly, but daily got a little plunged yesterday on some, I believe it was a pre-announcement or announcement of some earnings. Again, another one in a really good consolidation. All I do is grab my box tool. I find the levels, you know, these green levels. I connect a few of them. There's some connection. Oh, didn't do that right. And then we just drag it up and find out where our consolidation is. Right there, pretty easy to see. You got some false breakouts, some false breakdown here. It's kind of living in this area between 323 and about 220 or so, 223. Right now with the earnings that you had come out, it's going to be a little bit hard to get this thing really moving, but nonetheless, I think you have an opportunity to see this thing possibly break down a little bit more. Right where it did break down to, 221 is probably a level that you want to look at. From there, you got some good support. You could see some more lines and support across the left. I would say line in the sand, 218. After that, I'm out of this if I was thinking about being long of STZ. UEC, you got a uranium bug in here. All right. Followed by Mike on gold. So he's a gold and uranium. Uranium's been on a tear this year. So listen, can I just say something? Copper has, pretty much every material has. Look at lumber prices. Every material is going through the roof. So it's not like, if I may say so, oh, uranium's time has come. It's not that. It's that it's been in a horrible downtrend for a long period of time. And now everybody's just, look at that. This is from 2017. Finally broke out, which was awesome. Right above that 207. You could have called that very easily, right? If you were a uranium guy or gal, and you really wanted to look at where that break was going to be, you could have kind of drawn a line right about here. Look at it. Let me connect these pretty right about there. You could connect that 201 was your level on that, and from there you're off to the races on a weekly basis. On a daily basis, what we're looking at right now is you're trying to break above a little bit here. I would say that you're a little extended, but still you got great momentum on your side right here. However, you know, it looks like that your 319, which is kind of where we are right now, not that far away, is a level that you want to look at possibly adding on to. However, a breakdown from there probably takes you down to about 275. Now, one of the things I want you to notice from this, I think it's really important to recognize some of the characteristics of how charts look and what does it mean. It's things that you just can pick up from a chart once you know what you're doing with this Commander series. It's really easy because you say, wow, you know, look how tight between the ranges are on some of these. Look at, you know, these levels. Look how tight this one was. This is that range here. This is range here. The range that it's getting wider and wider. You notice that? You got some small ones here. I don't like to trade necessarily in these wide. I like to trade off of the tight bases and the tight levels that we see when we compress the resistance, the support from the altimeter. I love to see when those things are really compressing for a long period of time and then we bounce off, up or down, by the way. When you start getting to these wide ranges, and I start worrying that the range really may be a multitude. It's just a part of a range. So really 201 back to 330, that's a pretty big level overall, and just something that I'd be concerned about here. Otherwise, I mean, it looks like that this thing is holding up pretty well. I do think you probably see 288 again as a level before, unless something else happens here, before you see a big move to the upside here, potentially to test that, as we've been seeing lately. What else we got? I got a few others that I saw in here. STPK, Star Peak Energy. Put this in here. This is relatively new. This is SPAC. Came out with some the good news over the last few days. Saw a nice move. So what's really interesting about this, I want to focus in on this right here. This is a daily chart. First of all, we see that the momentum has really not been on its side for some time, right? It's kind of been rolling over since right about here. It's starting to pick up a little bit here. That was good. Now, what was interesting about that is you held this level of 26.13 for 1, 2, 3, 4, 5, 6, 7 days. Couldn't really break down very significantly. I would go back to even here. These, you know, you broke down, but you popped up a little bit, and then you popped up. Right now, you held really nicely. As you're seeing this divergence come back up and move up, really a good sign for a stock. A couple other ones I want to share with you. This is one of the ones that's been going up and down, up and down. This is kind of supposedly the Robin Hood of China. Terrible looking overall trend right now, right? This move here. However, look at this nice divergence from the bottom. You get above this 21 level, which is 1920. You got a pretty good level to get there. You get above this 21 level, or even clearly above the 20, let me just highlight this, 2015 level. I think you got some upside opportunity with this. Very quickly, you know what happened with Viacom last week? This now is a big problem stock. Gonna kind of rest here for a while. Wait to see the aileron maybe pick up. I tried to pick some of this up on this bounce to the upside. Really hasn't worked out. Kind of got out of it quickly. Said, you know what, not doing this. Same thing with Discovery. Fubo had an announcement last night, which was kind of a bogus announcement, but it is up a bit. This is also another one in a major downtrend. Another SPAC that came out, was exciting, caught the eye of a lot of investors. Vips got caught up also in that whole hedge fund disaster with Tom Wang, which went, took $20 billion and evaporated overnight. Interesting company, Chinese company. A lot of sell-off. You got to look for this. I would wait for this. I mean, if you can get above this 51.53, I think you're in good shape. JP Morgan coming out with earnings next week. Really nice top side hold here. I mean, this is squeezing. You can see where it's been holding since about 226. Again, a pretty tight range right here that's building off of a wider range, and that's pretty good. Something to keep an eye on. Roblox is interesting. And the last one I want to mention to you before you go is this. MUDS. This is a SPAC, Tops Trading Cards, NFTs. Something to take a look at and to watch. MUDS. If they start doing NFTs and everybody gets all crazy about it, really something that's going to be kind of interesting. Listen, thanks you everybody. Thank you everybody for joining me. We'll be again here next week talking about all things related. Make sure to go get your free 10-day trial and let us know if you have any questions. Thanks for joining me. I'll see you again next week. Bye-bye.